Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it really is like a push-up type of market. Push up, push down. It just doesn't seem to go anywhere. And that's the type of market you have after a sharp decline. We're looking at the Dow just to give you an idea of what we're talking about. And that is, we had this very, very sharp down move, which you can see right here. Really sharp. To get this type of action is not unusual. We expected it, and it's going to continue, I think, for a while. The important thing to look at right now is the fact that last week we closed at 16,000, I'll write this down, 16,643.10. And we're lower than that right now for the week. So even with all this choppy market action, so far we're still lower. The important thing is how are we going to close on Friday, and that's going to be a key. The other key thing to look at, in my opinion, is the RSI. Look at how this RSI since July 20th has really kind of stayed below the 50 line. That's going to act as resistance. So we have a rally. This is going to be an area that you could probably sell against if you're a short-term trader. Here's a quick look at just the portfolio. You can see really quickly, visually, what's going on. You can see Dow, S&P, Nasdaq, all red, very negative. The euro, two greens, longer term positive. That's good. That's a plus. This is mixed signals here in crude oil, and the gold is mixed also. But this is where the indexes are still negative despite today's rally. So please pay attention to that. Let's go to some charts. This is the S&P 500. Again, we are below the key RSI number we're looking at, which is 50. You can see how that really created a problem for the S&P 500. I don't think it's going to get over there anytime soon. And you can see the very choppy action like this. We're still below the parabolic. So again, this is something to get excited to. Last week we closed in the S&P 500 at 19,800. Last week we closed 1,988.87. And here we are, still lower than that number. Not to say we can't go higher than that tomorrow on Friday, but it's still down for the week. It's hard to believe, even with this choppy action, we're still lower for the week. A little bit of a different picture with the Nasdaq. And again, you can see we had the sharp, this has been really pretty much a technology-driven market, but you can see the sharp down move right here, choppy here. We did go over the parabolic, which is giving a little bit of strength, but even in that market, we closed last Friday at 4,828. I'll write that down, 4,828.54. We're still lower than that right now. Not to say it can't go higher, but again, we still have the pattern of the RSI. Below the RSI, this is resistance right here. I don't think we're going to do anything, and tomorrow's the key level. Where we close tomorrow is very, very important. This is the euro dollar, just dipped below the 50 line. You can see if we put our trade triangles on here, the longer term is still positive. The shorter term intermediate term is positive, but the short term, the daily, is negative, and you should be out of this market now. Remember, we talked about this. We also talked about the trend line in this market, which goes right here, and how it's broken today. So more of a trading range in this market as opposed to a bear trend. So let's see where it closes on the RSI tonight. Crude oil continues to, this is just like if you can think about the reverse of the S&P or the Dow. You had a very sharp move up, and now we're sort of going into a sort of trading range where it regroups, comes to another level. We are over the 50 line, which is a positive sign. You can see that should be now support for this market, and we're in a 55 trading range, 55 level, meaning a trading range. So that's how you should be looking at crude oil. We said yesterday we want to be a buyer. It still feels that way, but I want to see our red daily triangle turn green before I get aggressive on this market. Well, let's see what happens tomorrow. It's going to be a key level. The levels we're looking at, of course, are very, very important. And watch the closes. That's going to be very important, how traders are willing to go home for the weekend. And remember, the lowest close we've seen in these markets, so let me just write that down so it shows you, and you'll get an idea where we're looking at. So on the Dow, the lowest close we've seen recently, a couple of weeks ago, was 16,459.75. That's a key level to watch, and maybe not tomorrow, but in the days ahead. On the S&P 500, key level to watch there is 1,970.89. Very important level to watch. And on the Nasdaq, 4,717.16. These are the lowest closes we have seen recently. So watch those carefully and see what happens. I'll be back tomorrow and we'll take a look at these markets in more detail and see just what's going on. Have a great trading day and thanks for watching.